How's it going out there? It's Thursday, April 28th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down headlines and tell you what's really moving these markets. Great show for you today. It's because I'm about to interview one of your favorite guests, and that's Andrew Horowitz, host of the Disciplined Investor podcast, president and founder of Horowitz Company, where he manages money for individual and corporate clients. Also, best looking man in our industry in finance. So you guys go to our YouTube page to check that out to see that that's fact. How's it going, buddy? How's everything?
It's going great. Thank you so much for that truth.
For the truth, for telling the truth. Right? You can show up and tell the truth these days.
I know, Frank. Thank you. But they could tell. They know it's video. I was going to say when I first was thinking about it, I'm sorry for all of you that have to watch the video to actually get the information with my and Frank's ugly face on here. But here we are.
There's a reason why we do radio, but we're trying to do
audio only. Only.
You know, go look at when people say, you know what, you look good, and they go, for 50 years old. Just leave that part out. It'd be better, right? So listen, we see the market crashing. Obviously, we saw good earnings on Wednesday. It came back a little bit, but man, this sell-off is pretty crazy. And you and I, whenever we do each other's podcasts, we send a couple of notes and say, hey, what do you want to talk about? We just go from there, whatever, just a couple bullets. One of the things that you sent to me, which is surprising, is we're not going to have a back up the truck event like January 24th, but short-term bounce is like it could be a nice relief rally. Is that what you're seeing right now? Because right now it looks like a capitulation. We're seeing the VIX very high, but man, I mean, we're looking at the biggest companies in the world selling off 30-40% now. It's pretty crazy out there.
That's exactly the point. Isn't that exactly the point?
Yeah.
Now what's happening is that everybody thinks that everything stinks. Everything's bad. Nothing's good, no matter what happens. Yesterday, we saw Facebook supposedly come out with earnings before this is just one little hint of what's happening. There was a Bloomberg article that came out, I think maybe it was noon yesterday or so, and it was about their guidance. And it was an incorrectly published story. Well, we think it was at the beginning, but it was an incorrectly published story, and the stock dropped like 5% on a minute-by-minute basis. Then it was retracted, and then it was fine throughout the day, and then we know the rest of the story. But the point is that right now, if you look at what's happening, well, markets are not as oversold. And I use that term loosely because a lot of people use things like RSI, MACD. They use all these different calculations. I have my own that I've developed over the years, and it's not showing a severely oversold situation. Now, we don't always have to get to that point of being the oh my God moment, but there usually is, as you mentioned, this capitulation where people are throwing in the towel and saying, the hell with this. These companies just go down every single day, even with good news. I'm not dealing with it. Look at Netflix, what happened over the last week or so. And what's happening is that we are seeing that there is a general puking of stocks that is somewhat indiscriminate to a degree. And nobody wants to hold things because they've been trained that, you know what, you don't fight the Fed. And the Fed, which we can talk about in a second, has done an extraordinarily poor job at trying to scare the hell out of people to slow down the economy. So with all that, to answer your question, the point is that there could be a short-term relief rally, as we saw what happened when Microsoft took a good number, as opposed to what we saw with Boeing, for example, which was just horrible, and was able to revive some investor confidence that all is not lost right here. From there, when we see that maybe the mega caps will provide some kind of legs in the near term, and the realization that maybe some of these overly shorted stocks have done their job of getting eviscerated down 80% or so, that maybe it's time to some bargains, and we'll start seeing that creeping in. Short covering will ensue. Short covering is always the first thing happens in a market rebound. And the other thing we could talk about is if the Fed just can contain themselves for a minute, maybe we can have some legs under a market and valuations that come back to something that is reasonable.
So what do you mean when you say the Fed contain itself? Because we know that they're expected to 6 price hikes according to Bloomberg. That's what they're factoring in by the end of the year. We know it has to get to 2.5% to 3% based on where the 10-year is. They could say anything they want. They could say, we'll do it in 3 months, 6 months, 12 months, whatever, but they have to do it, right? So, what are we waiting to hear from the Fed and, that we don't know already?
So do they have to do it? That's an interesting question. So the rates are there already, aren't they? On the 10-year, they're at close to round number, 3%, between 2.7, 3%. You know, they're close enough to 3%. Interest rates for mortgages, 5.35% on the 30-year. The Fed, do they actually have to? Who borrows the Fed fund rate?
Banks.
What they want to do is slow down the economy. They slow down the economy by raising interest rates and drawing out liquidity. Liquidity is brought by the fact that people can afford to utilize the loan, the debt, the mortgage that are out there. Once it becomes unaffordable because it's too expensive to utilize, they won't use it. The Fed has managed to jawbone the rates higher, already slowing down the economy. Now, some people will say, well, you know, if the Fed is at 0.5 and rates and Fed funds rate futures are up here, the futures are up there already. So right now, the Fed, do they really have to go and do they have to necessarily raise rates? Of course. But do they have to get overly extended to slow down the economy? What I mean by that is what may end up happening is because of all this jawboning, and I wrote this on Twitter 2 days ago, the Fed speakers need to shut their mouths and go back into their caves instead of the free lunch speaker tour.
Yeah, which was never the case. Back in Greenspan, back in Volcker, that was never the case. You didn't have like 8, 10 people from the Fed all speaking out and some of them contradicting each other. It was never like that, right? It was never like that. It's crazy.
We didn't know the Fed guys. We knew Volcker.
Yeah, that's it.
We knew Bernanke to a degree. He started getting the communication strategy going. We knew, and by the way, you probably can't name them going back even further. I can't.
Yeah.
But here's the thing. Yeah, Greenspan we knew because he was just a fascinating individual. Now they're all rock stars.
Yeah.
It's like, cool. Who are you? Part of the Fed. Really? Oh, yeah. And what are you? You're an overpaid economist that gets things wrong all the time. Is that who you are? Yes. Okay, rock star. So they're invited to all these Harvard Business Review lunches and the Stanford Club. And
once they leave the Fed, they make a fortune too. They make an absolute fortune.
Yeah.
Working for the Goldman Sachs.
So the thing is, right, exactly, because then they go into the next stage. But they're speaking and they send up, interestingly enough, trial balloons. It's a real problem the way they've done things. And they're doing this because they do it because they're nervous. They're petrified of losing control of the markets with $9 trillion on their books.
Yes.
$9 trillion.
That's $9 trillion,
a lot of money.
Which, so I think it was $4 trillion pre-COVID. And Correct. It was, believe it or not, I looked this up. I think it was 6.5, $7 trillion. So this was through 2020, which I get. Okay, fine. You locked down everything. You decided to lock down everything. Nobody knew. Whatever you disagree, agree. Nobody knew, and everybody played it safe. 2021, at the beginning of 2021, we had earnings go back to record highs, household wealth record highs, every asset class you could think of, cars, homes, everything at record highs. And they injected another $2.5–3 trillion into the market in 2021. Where did they think it was going to go? And this wasn't like to the banks to backstop stuff, but I mean, there's not a person.
They liquidated the economy. This will go down as the worst Fed ever.
I mean, how
in my lifetime?
We all pay our. I don't know if they don't pay their bills. I don't know if they have personal drivers and they get everything paid for. But anyone who owns anything and lives saw the inflation coming 2-3 years ago. As it get higher and higher and higher and higher, and these guys are trying to tell us, well, there's no inflation. I don't want to look at the past. Let's look at the future. And the future is what you're saying is maybe they might not have to be that aggressive, but if they're not, how do they expect to control inflation? Because that was their playbook, right? Hey, it's transitory. We don't have to do anything. And now they're saying,
Frank,
shit,
can
really
they though? Can they control inflation? Let's break this down for a second. I know that you like to do this, right? Yep. What's inflation? Inflation is when I go to the store and I have chicken panic. I go there the other day. I go in front of the chicken case. I'm going to buy some breast chicken, and I stand there staring in a funk.
By the way, really quick, hold that thought. But if you want, go on Twitter, follow Andrew. I'm going to give you a nice plug because what he likes to grill and show, it's fantastic. Passionate about it, but amazing meals. Go ahead, keep going. Go.
Yeah, sorry. My Instagram is Dad Bod Food Blog. Only food on there. Dad Bod Food Blog. So, yeah. So I had chicken. It was $5.50 a pound. There was three of us standing there looking at each other, going like, the hamana. What are we going to do here? Who's buying chicken for $5.50 a pound at the place that I go to get cheap chicken? So what we have is a situation where in the chicken, it's a combination of issues, but we have the bird flu. We have a situation with oil that we have a war in Eastern Europe. We have grains that were used to be coming from Ukraine, corn and wheat. Palm oil halted distribution and exportation from is in Indonesia. God, can't get palm oil from Indonesia, the world's largest distributor as of today, or as of yesterday. Mm-hmm. You have all these things. Now, let me ask you something. How is the Fed ratcheting up rates going to take care of the palm oil situation or the Ukrainian war situation? So there are certain parts of this that they have to realize are more supply oriented and certain supply and demand. The Fed ratcheting up rates is not going to cure bird flu. So we're going to have to live with some of this for a while. It's a weird circumstance. Mm-hmm. But if the Fed makes the very bad decision, just like they made the bad decision to keep on liquefying the economy, at a time we see a wartime environment, the Fed is going to
with the market crashing.
Raise rates. It's insane.
Yeah. Just to put that in perspective, this has never happened. We've gone through a lot of periods, and that's why I tell you, throw every investment book out that you ever read, because this is nothing. Like, there's nothing to compare what we're going through, where we have zero interest rates through 2007-8, right? Just started lowering them, kept them there, and said, wow, this is great. The economy's doing great. We could just keep injecting money into the There are all consequences. Then you lock down the whole economy and say, wow, we could print as much money as we can. It doesn't matter. And this is without the Build Back America bill, which, thank God, that didn't get passed, because we'd be sitting at, instead of 8% inflation, 12% inflation. But it's just constant money printing. This has never happened, where you see the Fed usually, there's usually the playbook is they are lowering rates and stimulating the economy when you see something like this in the market, right? But the fact that they're so behind on inflation, it's the first time you've seen a market really, really come down the way it's coming down, and the Fed actually tightening when, what do we have? All major indices below the 200-day moving average as of, the Tuesday crash and everything. But that you don't see that ever, which is crazy.
They've done a lot of tightening between turning off the bond buying and, of course, not reversing it yet necessarily, but turning off the bond buying program, deliquefying or sucking liquidity out of the markets. That's what's going on right now. Really, that's a big part of what's going on. Aside from the fact that the reason that earnings are not doing as well is because they are slowing. They've effectively slowed down, and the pull forward effect that we had over the last couple of years, that was very apparent. And the retail investors that were just lost their minds with the idea that they can make, $1 billion in a day with $20 in their account. This idea that has permeated with NFTs and with, I had a great lunch with somebody, we're talking about NFTs, and this is a guy that really digs crypto. And he's like, how ridiculous is all of this, right? And what's the purpose of some of this? There's some great stuff. NFTs themselves are great, but they've been bastardized by Bored Apes.
Yes.
And crypto is great, but it's been bastardized by these, shit coins.
Most of it's
so
garbage.
It's
yes, it is.
Right. Same thing with SPACs. SPACs, great idea, SPACs. But
I don't know if that's such a great. There's a reason why they disappeared. Now you have a retail. Without the retail environment, it doesn't work, right? Because you need someone to pump it to, because they're getting in early. They're inflating valuations. They do the roadshow of these companies. They're at $1 or $2. You need the retail environment, and you basically have to say, okay, we need a lot of stupid people that are going to buy the shit out of this and keep buying it, so we can get out when we launch this thing. And Chamet's out of all of them. They made their money. They cashed out, and these people are down.
You had to know that when Chamath Papalapahapadia was, I can't really pronounce his name. What was it? Papalapadia?
I call him
Halihapadia?
I can't even go close. Yeah.
Cham, I can't do it either, right?
Yeah.
So Cham, we can't even pronounce his full name, so we'll call him Cham. Mm-hmm. So Cham, when you knew there was something wrong, when he was putting out one-sheeters with pro forma, with no information, just
no warrant structure, no pipe deals, what's going on behind the scenes, nothing. They didn't have to put the disclosure in there. Listen, when you do a private deal, and Andrew, when you invest in a private company, it's going to go public. It's usually 7 to 10 years, right? By the time you can have your liquidity event. That's if the company gets acquired or you do an IPO. With SPACs, it's immediate, right? So you're getting you're investing early. You're able to cash out venture capital. Venture capital is not there to invest in companies and keep them for 10 years. It's venture capital, and they cash out once you go public. And just like Peter Thiel did with Facebook, that's their job, and then they move on to the next situation. This was the perfect solution for them to throw a ton of money in, get in cheap, and get out much, much, much quicker. Lower liquidity, less regulation, less disclosure, and now you're seeing what happens. That's what you have when an environment where it's so easy to raise money and low interest rates and just flooding the market with cash. That's what it opens the door to, right? When
crazy. I say back up the truck, if there was a truck and it had money and money was zero, how much of that money would you borrow?
Mm-hmm.
If there was a truck with money
mm-hmm.
and interest rates was zero and that truck came to your house, how much money would you borrow?
Exactly. Yeah, all of it.
All of it.
Yeah.
All of it. So that's what happened.
Mm-hmm.
And we debased the currency. We went haywire, this grand experiment with fiscal and monetary policy. It's really a shame. That doesn't mean all is lost, though. I want to be clear about that, right? There are great opportunities. Some of the names that have come down as dramatically as they are great earnings. I mean, let's look at just for a second Netflix. I know they got their inherent problems with password sharing and all that, and the earnings are coming in and they're spending a lot on production, et cetera. But what a great property as opposed to Disney Plus, which is crap in my opinion. Yeah. But when you look at Netflix, great property, either for acquisition, maybe, I don't know, or for the continuation of what they do. They still have a very sticky platform with a good amount of price elasticity in there. And they're just getting beat up incessantly right now. It looks like getting towards a very interesting point. And you see this stock by stock by stock in some areas. There are a lot of crap that deserves to be down 80%.
Exactly.
Is a DocuSign a company that deserves to be down 85%?
It's a great company.
I don't know.
I looked at Roblox too. Roblox, and I was dead wrong.
Roblox too. It just does not stop going down.
No, but they're comparing it to the Rivians that generate no revenue. These guys are seeing tremendous growth. They're in the Metaverse, and you see money pour into the Metaverse for the past 3-4 months, billions of dollars from. I mean, that's where I only see money being raised right now through the Metaverse, and for them to be in that market, Nike Land signing up corporate clients. I mean, everything's going right for these guys.
NFL. Yep. Mm-hmm.
Listen, they were expensive. Don't get me wrong. They had a growth profile and they need to be adjusted. But just by 70%, 75%, I don't know about that. No, I agree with you.
Mm-hmm.
Just everything's being sold.
Right.
Let's get into so why. We look at the case here, and people, I think, aren't familiar with bear markets, what happens where, just like bull markets, all the shit goes higher. It goes a lot higher than even the good stuff, right? So the bear market, you're going to see a lot of stuff come down, and you say, wow, UPS reported great earnings. How come it's down? Qualcomm just reported great earnings last quarter. They're going to report, how come that's down 25%, where even, Microsoft's numbers have been great, and even they're down, right? So, they went up after a fantastic quarter again, but still down 20% from its highs. Why does that happen? I want you to explain that. I mean, the margin calls, the leverage in the market, how they have to sell different things. Explain that, because I know you get that a question. I get a lot. I try to explain it, but I want to hear it from you too. Is why is my favorite stock going down when they just reported great earnings?
So beauty is in the eyes of the beholder, first of all, and all the value of what a stock is really built on confidence of the outlook in the future of what's happening, built on a calculation using a capital asset pricing model, a CAPM, which basically is very simple. How much for technology, for example, because when we talk about that's discount models, et cetera. But basically it says, hey, what's the value of the forward, what's the value today of the future cash flows of a company? And there's different ways to deal with that. Backed up by what? And it's always on an interest rate, right? The interest rate is what? We use what's called a risk-free rate of return. So for example, Frank, if I said to you that you can get 20% on a guaranteed investment, a stock doesn't have as much great value because who cares? I'm taking the 20% guarantee for the next 10 years. Now, if you're 0% or 0.2 or 0.4% or 0.1% of an interest rate, now all of a sudden a stock that has a future growth of, let's say, 20% per year looks a lot more likely that I can make money with that, right? There's that risk trade-off. So when you calculate the capital asset pricing model, when you look at the discounting methodology, when you put in an interest rate as a risk-free rate of return, once you do that, as very simple, here it is, black and white. When interest rates go up, the valuations factors go down. That's it. Very simple. Interest rates go up, valuations models go down. Now, the other thing that happens is in recessionary times, oftentimes people think, well, we have to revalue, re-rate a stock. Why? Well, the reason very simply is this. The potential for making less money by the company over that time period is much less. They're not going to earn more because people aren't spending more. It's all about consumers and spending and companies and spending. And when you have a situation like that, again, it re-rates the company. So if we're going into a double-edged sword here, where we think we're going into recession because interest rates are going up, the capital asset pricing model is going to help us re-rate the companies at a lower cost, a lower valuation. And the idea that earnings are slowing down doesn't help. That's a double whammy. So now all of a sudden, the value of the company has been changed dramatically or re-rated in a recessionary time, or in the front end of a recessionary time. Does that make sense?
No, it makes sense. It makes sense because we get that question a lot. Yeah, I totally agree. So it's, everything comes down. You're seeing a liquidation preference. Also, you're seeing people paying for their taxes that they did very well last year right? And April 15th just passed. And now you're like, holy shit, my portfolio's down. And you're going to sell some of those stocks to pay that, right? So more money coming out of the market. But yeah.
And you have the word war. And you have the word nuclear that keeps being mentioned, freaking people out.
Yeah.
Right?
Nuclear,
I mean, we do not need to say that word. Now, Iran's going to have capabilities in the next couple of weeks, supposedly. And Russia's like, hey, by the way, just to remind you guys, we have nuclear capabilities. Like, no. Yeah. We don't want to know about that. Don't remind me.
Yeah. And this is Ukraine trying to bring, the powerhouses into the war to help them out. And I get it, but it's just, yeah, the nuclear thing, and then you got the Fed. And I want to talk to you, because this is a good transition here, because I hear this all the time. And people ask me this question and say, what do you think about the dollar? Is it going to be around? And central governments suck and this and that. And all this crap where what's going to happen? I'm like, listen, the least of your concerns if the dollar crashes or just goes away is, you're talking about like extensive riots. I mean, the world ending, right? I mean, it's the whole, the whole world's based on the dollar, basically. So, but people are like, it's going to, and I want to show people something, and I want to show you this chart as well. But this is the last 6 months of the dollar, right? And look what's happened to the market, especially let's go to 3 months, right? And let's look at the last month, what happens, right? We're seeing the market crashing, and the dollar goes higher and higher and higher, right? Dollar index. So, yeah.
That's a big issue.
Yeah, so it is a big issue, but it's still the safe haven of the world. It's where people go, right? And so talk about that a little bit, because we always get, how are some of the plays on a dollar? Because as dollar goes higher, it impacts a lot of industries, a lot of countries. It impacts gold, right? As dollar goes higher, even as rates go higher, because you're not, gold used to be great. I mean, I've heard arguments for deflation, inflation, all these things. We've had negative real rates forever, which is going to change, but because it doesn't pay interest, right? But now you're seeing rates go higher, so it's not. Is gold good for anything anymore? Because we just went through an environment over the last 5-6 years where gold should absolutely exploded, and it's not. And now it's even coming down now, because if you look at gold stocks with inflationary pressures, with everything, all the costs higher, but even gold itself, you would think gold would be trading at 3,000, 3,500. If it's not now, will it ever? I mean, and again, that could be a function.
I mean, in the last
dollar.
year, it hasn't moved. It's not great. I own some gold for client portfolios and silver. Me too. Actually, I'm happy it hasn't moved, right? Everything else is going a little crazy.
I mean, it hasn't moved.
No safe haven.
Basically, it's underperformed every single asset class since 2012. And if you're in it, you got killed where, the opportunity cost. Anything else you could have bought, like, those Five Below, just noodles for your pool, or would be worth more than, what you paid for gold. Not price, but percentage wise, it went up higher. It's just every single thing went up except for gold in an environment where you think that gold should actually take off. But, and again, the dollar goes up, it's not as good for gold. You're seeing gold sell off. But
let's look at gold. Bring up your chart again. Let's look at gold, just to bring up GLD. Let's say it's since November. So bring up GLD from, and can we squeeze it down to November or so?
Let me see.
Is this weekly? Is this daily? What is this?
So... yeah, this is a site that I just brought up because I don't have my my current platform up. But
okay, so what is this? So
this is 3 months right here. So this is 3 month. This February.
So let's call it higher over 3 months.
6 months is November, right here. 6 months.
Okay, it's higher. Would you agree?
Yes, definitely higher.
Okay,
yep.
That has been not great. It's been a hedge against equity volatility and bond volatility.
It's higher. Yeah, that's
not great. Higher. Not great. But what I'm saying is, it worked.
Yeah,
it worked. Now, when you want to tell me that Bitcoin's better or this is better, I don't know. That's not the point. But you asked me about gold. What is it good for? You know what? When the shit hit the fan, so far so good. No, it's not a great investment. But you know what? If someone is down 25% on their portfolio in the last several months due to the fact of what's going on, they may have been a lot happier, slightly higher in gold. Yeah, that's all I'm saying.
Yeah,
but other than that, there's a lot of question. I agree with you that there are those gold bugs, which are like Bitcoin maximalists that are like, Peter Schiff, which I know you do banter with quite often on Twitter. And I had him on my shows.
Why do gold bugs and Bitcoin bugs hate each other? I mean, I own both of them. I'm a believer in both of them. I just, I'm pissed off. That's what I'm saying.
Cats and dogs, man. It's just, why does cat hate the dog?
They both
cats and dogs.
Don't believe in central governments. They hate the dollar. It's just an alternative. Why not? I mean, it's so funny how it's the same reason for buying both, but I just feel like both of them don't understand where if you see them understand
it's very simple, Frank. Very simple. You know what it is?
It.
It's what the most blood has been spilled over our history. Mm-hmm. My God is better than your God.
Yeah, pretty much.
And that's what it is. They're just all about that, right? No, or Jets are better than Giants. Do you know how many people have been just face planted for just that?
Yeah.
Right? As a Jets fan.
Yeah, no. As an Eagles fan, but I know living in New York and just the Giants. But it is. Yeah, for me, when I look at it, it is pretty crazy when I'm looking at the dollar, which goes into, I love how Russia sold a lot of their dollars going in. And, they knew exactly the playbook, what we were going to do, where these sanctions are going to come. We did the same thing. We took over Crimea, Georgia, same exact playbook. We did the same exact thing. They were prepared. But what about China? I mean, we're seeing China where, for me, man, when I look at where we are compared to China, where I don't know if it's the current administration, I just feel like they're gaining on us. They're they're smarter than us. They're using common sense. They're like Poland, for example, is a great example. Even the U.S., right? Coal's the worst thing in the world. It's terrible. And Poland's like, we got to save the environment. It's horrible. We're never going to produce coal. We're going to import the shit of it from China. Like, if you do that, like, it's not going to hurt the environment, right?
No.
So just the political portion of it. But China's just, listen, they're producing coal. They're very smart. They're going to one of the few countries where, stimulus now, right? Which is going to probably come in tax incentives and things like that. They did see a little inflation past 2 quarters, but now you're seeing their lockdown where, they're a little crazy over there. I mean, like you highlighted, I think it's one potential case. Go ahead. You got the statistics. Go ahead.
A little. I mean, we know what's going on in Shanghai. So in Shanghai, if you don't know, if you haven't seen, they're not only making you stay in your house in certain areas, they are putting fences, like physical fences around the house so you can't get out. Yep. And in Beijing, they did 20 million COVID tests and found one potential case. One. Now, they're not going to lock down because of that, of course, but that, first of all, is a pretty unbelievable undertaking, especially because they're charging $4 per test. I don't know how they're doing that, but it's mandatory. So they're collecting, $80 million on their testing. That's mandatory. And they're making sure, because Beijing's, obviously their capital city. Shanghai is a big port city, and manufacturing. There's a lot going on in Shanghai. But that's locked down. You got to wonder if they ever really think they're going to get away from this. They can't. They should. This is all because of the Olympics, in my opinion. It has to be.
I don't know. I think it's hilarious because we're looking at this was, all right, it's a fact. This was originated in Wuhan lab, right? We all know that now. If you said that's, whatever, like 18 months ago, you got kicked off the internet and probably fired from whatever job you had. But now we know that.
I think it was always known. It was just the way it was presented.
Maybe
like it was purposely done and all that.
Yeah. So regardless, but what did they do when they found out? They said, okay, we're going to lock down every place in China, right? Wuhan was locked down, and they said no traveling, except you could travel from Wuhan to anywhere else in the world. You just can't go anywhere else in China, which is where it's spread rapidly throughout the world, right? So just the fact that they're this stringent with their policies of lockdown, and the fact that they weren't back then, where they should have just completely locked down and said nobody goes anywhere, right? I mean, this could have been really contained in this different world, but it's just funny. I don't know if it's learning from their mistakes that you go, once you swing one way, you got to swing totally the other way. But just the policies I'm seeing here were not the policies at the beginning.
This seems absurd, and almost as we know what's happening and the potential. I don't mean to be glib or unfeeling or uncaring about this, but we know there's at this point, very small chance of even hospitalization for that matter, right? Of some of these new variants that are out there. We don't know what's going to happen in the future, but right now, and it's almost like it would be a good idea, the best idea, to have herd immunity that's developed, because they are never going to be in the clear if their vaccines don't work and provide any kind of antibodies. There's no way to eradicate this, because anytime you let somebody in, I don't see the end of it in China, and I just don't. It's going to be a constant battle. Because there's a lot of people in China, right?
Yeah. I mean, listen, I credit a lot of people. I credit CNN for the reporting. There's 2 or 3 of them that were in China taking videos, and it was like a complex with a bunch of, 30-story, 20-story buildings or whatever. They were apartment complexes, and people actually screaming. They were, just breaking doors down, taping stuff up, and just showing drones. Like it was pretty crazy there. Like very surprising considering what you're hearing, and just seeing that and seeing these videos, which I was like, whoa, holy shit, it's crazy there. I mean, this is like
crazy.
This doesn't seem like a place, that we hear about when it comes to China, right? And it was a little nuts. And we have a lot of China listeners.
And rightfully so. There's a lot. India and China, and I don't want to get to a whole pandemic talk here, but India and China, rightfully so, have a lot to worry about because it could really rip through their citizens and people there and their economy. But China doesn't seem to care. They're closing down their economy anyway, but that will yield possibly, and I've seen this before, China leading us out of these problems. That will lead to stimulus through China, which could bleed into the rest of the world because that will be substantial. Mm-hmm. But I wouldn't count on it.
So let's get to the last part here because, I always ask you for ideas. It's a crazy market right now. For me, I'm looking at it where, can you pick away at there's a big difference in technology if you're looking at even the bigger names, right? You look at Microsoft, $100 billion in cash, 25 times forward earnings, growing those earnings 20% plus. And I look at Disney, which is trading at 25 times forward earnings as well. Those earnings aren't going to get back to pre-COVID until 2025. They went crazy on streaming, which is costing them a fortune. They're sitting $40 billion in net debt compared to Microsoft, same valuation. Yes, two different industries. But I feel like I'm seeing so much separation where everything is down, but there's a lot of companies I'd rather pick up than some others. So what are some of the names that you like right now? Because, when I'm looking at the fundamentals and the growth profiles, I see a significant difference between companies that are all down 30, 40%.
I mean, just to consider this, that one of the things that we do in our it's called the TDI Managed Growth Strategy portfolio, which consists of stocks that are picked and filtered by us through a quantitative filtering and screening process, is that we are getting, this is actually bizarre. We are getting more names that make it through our stringent screens. I ran it today than ever. Well,
I mean, it makes sense with how much stocks are down though, right?
It's not about down. It's about earnings. It's about quality of earnings. It's about earnings consistency. It's about revenues. It's about margin. I'm telling you, I'm like looking at this stuff. We go, we started tinkering with this formulation and saying, you know what, let's make it even more stringent. And we're still getting more names than I've ever had. Not kidding. I'm like, well, how is that even happening? Margins up. You change your margin expansion requirements, your revenue growth numbers, quarter over quarter, year over year. And looking back, EPS numbers, all those numbers. It's like the best run we've seen, which is pretty amazing. So right now, I think that's really important to understand that quality of earnings, generally speaking, like a Microsoft, quality of earnings, right? Mm-hmm. Google, they had a good number. Everybody's all freaked out. They're pulling their hair out of their head and running around like they're on fire because of the YouTube drop and all that, which was not that substantial, for goodness sake. Oh my God, TikTok. Oh my God, TikTok. Oh my God, this whole TikTok thing. Everybody's freaking out over TikTok, and that means that Facebook is going to be horrible. I don't know. I mean, you look down the road and you think about what's going to be, especially if Elon is successful in his Twitter pinch. If he does that and he takes the advertisers out, those advertisers are going to look for some other place to go.
Yeah.
It's going to be TikTok. It's going to be Facebook. It's going to be YouTube. It's going to be Google. It's going to be somewhere. They're going to have all that money to spend if it's going to be non-advertising, non-ad supported. So I think that you have to be really careful. Some of the things that we've done is slanted over to banks. As the yield curve keeps on, it's a little wonky, the yield curve, but banks in general, like Bank of America, but banks in general, the concept of leaning into energy related names. Energy stocks have years of earnings momentum built in with what's gone on with the price of oil, right? What you study that, you're an energy guy.
Yep.
I mean, so absolutely. It's like that, and almost to a degree, you have to look at, and we're overloaded, frankly, with energy stocks, which never happens. We hardly get energy stocks ever through the screen. It's a growth screen. Energy is not a growth-oriented investment, but we get that. I think you need to be on the side of more of a value orientation right now, but not deep value, like a GE, which keeps on shitting the bed. Can't get those. That's done. Things that are very interest rate sensitive, housing, questionable from a fundamental standpoint. But there are some really interesting names. You talk about the metaverse. I keep on getting near it, getting slightly burnt and just, getting a warm touch, and I pull back and they just keep on going lower. and I try to get in there
Don't
again.
Look
I'm
at
like,
Roblox, Fortnite. I mean, that's not metaverse plays, and Facebook as well is not really going to be in a blockchain. But it's
you don't think? Wait. You don't think Roblox is metaverse? How does that?
No, that's more like a virtual online platform because I mean, they make all the money, right? So really, what
Right.
the metaverse is an actual economy that's permissionless, right? That means that you make the money, you own it, and Roblox owns it, right? So it's filtered one way where Roblox is making all the profits, where these other metaverses, even if you look at the Decentraland, you could have actually businesses in them, own your own properties, you own it, right? You own this. This is decentralized, right? It's a lot different from Roblox, but Roblox is considered in the metaverse. And I'm not saying it's not a metaverse play, but when you really look deeper at the metaverse, something I've been doing for the past 4 or 5 months, you really see the difference where this is more like a virtual world where metaverse is more like an economy where people can make money and sell their NFTs or sell whatever they want through there. And so
I hear what you're saying. No, I hear what you're saying. I see the metaverse as the overriding of all of that. That's how I'm just saying I'm not saying you're wrong. I'm just saying how I looked at it. So maybe that's right.
Yeah,
are you going to the permissionless conference coming up in Palm Beach?
No, I didn't know about it, but I am going to a Metaverse conference in a couple months, NFT conferences. NFTs are fascinating. It's sad because Bored Apes and all that shit, but when you really look at digital ownership of your own property, I give the example of ticket sales where these owners of tickets where they sell them for $100 to Ticketmaster and StubHub and everything, and they sell them for whatever depending on the venue and how popular it gets. It could be $1,000 ticket. Now they're going to be doing them through NFTs where every time they sell them at a higher price, they get a royalty. That makes sense. Not that I want these billionaire owners to become richer, but the NFT are fascinating. But unfortunately, like you said, you have so much bullshit in it. It makes it look so bad. But now you open up an economy where, look, everything we do on the internet, it's a rental economy, right? I mean, they could shut you down. They could shut this down. This is going on YouTube right now. This is going on iTunes. Apple could say, F you, Frank, we don't like you anymore. And you're gone. And there's nothing you can do about it, right? So that's not... Yep. That's where the metaverse is actually going, where this is your content, you own it, where I think that was the original version of the original thoughts of the internet supposed to go. It just so happened that 4 or 5 companies took control of every single thing and every aspect. But now I think people are starting to allude to the fact that, wow, you're using all my pictures, you're using everything I have that I think is okay to put on the internet and Facebook, but you're actually using them and sending them to advertisers basically to see exactly and track me and basically sit on my couch and make a fortune off of me through advertisers, right? Because you're the product. Now you're seeing this thing open up, and I think we really saw it through the election cycle, through COVID, of things you can say and can't say, and how they could shut off people whoever they want. And I think that's, again, not to get too deep, but man, that's me, that's an amazing concept, really having people own stuff instead of being reliant on companies that really own all your stuff. And a lot of people still don't know that.
And the big thing that people don't understand, and if you haven't really looked into it, is very simple, but yet complex. I know that sounds silly, but NFTs, forget about everything you know about it. It's not about, buying a painting in there. I look at it as a digital authentication protocol on the blockchain that can be utilized for a lot of things. That's it. End of sentence. Yeah. So that now they said, buy paintings is NFT. No, it's
change a freckle on a face. It's crazy.
Right.
It's insane. So any individual names that you like? You said
not
oil.
giving individual names this time. Not doing it. Not this time around. I can't. It's just there's too much volatility. I will be wrong, I'm sure. And I think. Do you really want me to give you some names? Do you have to? 1 or 2? You want me to?
Name. Wait, what's the symbol for Microsoft again?
MSFT, Mr. Softy.
Good. Microsoft, you're recommending. I'm gonna. So you're gonna recommend shorting Microsoft since you don't like anything.
Oh no,
you said it.
I mean, I think Amazon is an interesting play right now. No, I think Amazon's an interesting play right now. I think that when you look at some of the names in the, I find it fascinating. Some of the names in the security space that they're just getting obliterated. You look at SentinelOne, you look at CrowdStrike, you look at Palantir. It's just like, why are these companies just getting obliterated with all the rest of them? And those are really interesting. I think
when Microsoft's earnings, Andrew, which was interesting, everything, they even like Surface sales and LinkedIn went through, every single thing went through, but they said they're seeing, the software part of the business and they said that's a little bit weaker. We're seeing slower growth, and I would worry about that. But they're so diversified, and cloud's just destroying it, right? And they're not including that in software.
Right.
But that's interesting that that was the one component that they took out. The CEO said, I'd be a little worried about the software component part of it. But yeah, maybe it's just, I agree with you. I'm surprised it's down so much. I really am.
I mean, healthcare, I don't think there's any particular picks in there that I could see. You have to look at probably the resurgence of some of these drug stocks that can treat I still like some of these areas that are very, 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 very far away from anything but CRISPR technologies, whether it's edit or CRISPR, kind of an interesting look in there. So those are a few names there also.
Listen, you don't have to give away names or give away names. I just like to get, I know people like them, but if you don't have anything, I'd rather you say no than.
I would like to wait to your next show to see how this all shakes out. We have, like I told you, energy is a big positioning. We own Microsoft, by the way. Twitter. Do you want to get near Twitter? I think it's very possible that this thing falls through, as crazy as that sounds. Because
it's a nice
I think that he's going to get bored.
I mean, yeah.
Yeah. I mean, I'm actively, I have a put on it, but it's 2 months out at a 40. We'll see.
No, that's not, that's what it's going to fall to if this thing falls through. So that makes
right,
sense.
Exactly. I don't think it's the worst thing. But I do think that we'll be, unless something really weird happens, I think you're still going to see a lot of upward opportunity in Amazon and some of the discount retailers. People still need to buy things. And of course, the continuation with the Costco's, the Walmarts, which have been really good plays, some of which we own in our portfolios as well.
Great. Okay, we got a minute left. If someone wants to find out more information about the wonderful, awesome, and great looking, you got a nice shirt on today. Match your eyes. You look sharp today, man. You look really sharp.
Thank you, sir.
But if someone wants to find out more information about you, how can they do that? As I pull up your site, go ahead.
So you go to iloveandrew.com and hey, look at the sandwiches right there. Go over to the disciplinedinvestor.com. There's all sorts of information. You scroll down a little bit or up a little bit, Frank.
I want to show. I'm waiting for the scroll. There it is. Wait, let me see. 15 years. I know it's 15 years.
Oh, yeah, there you go.
A year behind you, so nicely done. That's what I was waiting
15 years of podcasting. Yep.
Awesome. Good
but basically all the strategies that we manage there, because we do manage money, that's what it's all about. And what we do on a regular basis is in there, as well as the different ways that you can get involved. But also, of course, make sure to tune in to the Disciplined Investor podcast on Apple, on Stitcher, on anywhere you could find it. That you have on your podcasting apps, you'll be there. And Frank, before we go, if you do want to go to the permissionless conference, let me know. Go look that up. Just write it down somewhere. Permissionless.
Are you going?
If you go, I'll go. I got tickets.
You're pretty close to it.
If you go, I'm going to go.
Right,
I do have VIP tickets to it. It's through Blockworks. Cool. You know Blockworks.
When is it? It's coming up.
Like 2 weeks, 3 weeks.
Okay, cool.
I'll look it up real quick. I'll look it up in the background.
I'll be able to take a look. I'll be able to find it. But yeah, my schedule's going to open up a little bit. So yeah, definitely.
Web3 in 2022. Let's see. It's coming up Thursday, May 17th and 19th, which I will happen to be out of town. Now that I look at it. I'm going with my son. Going with my son to Arizona, Sedona.
I guess I'm going, but I'm using your tickets. So that's cool.
You can use my tickets. I'll give them to you.
All right, cool. I'll let you know.
Absolutely.
I'll let you know. Andrew, thanks so much for coming on, buddy. No, I love you.
Thanks, Frank. You're the best.
I'll see you soon, buddy.
Thanks.
Take care. All right, guys. Great stuff as always from Andrew. That's it for me. Questions, comments, for email me at frank@curzioresearch.com. That's frank@curzioresearch.com. Anytime. I know it's tough market out there. It's a little crazy, but it is earnings season. We see some really good earnings. And as always, I'll report back to you guys soon. If you're a Frankly Speaking subscriber, which you get our podcast, because you are an actual subscriber to any of our products, which we do on Friday. It's not on iTunes. It just goes to you personal. Those people that pay for any products, even for the least expensive to the most expensive. You get that podcast. I will see you tomorrow. Otherwise, I'll see you next week and have a great weekend. Take care.